Hello from Trend Signal for our review of the data and events of the week beginning the 17th of August. Last week's events were dominated by the sharp and pretty much unexpected fall in the renminbi, the Chinese currency. The fall prompted fears of deflation in the West and the start of perhaps a competitive devaluation by the central bank in China, the People's Bank of China. Whilst the move could still be interpreted as that, the currency was viewed by many economists as being overvalued, considering the poor data that's coming out of China, has been coming out of China over the last 6 months or so. In fact, the central bank in China did seek to calm nerves on Thursday with a rare press conference, at which its officials downplayed the idea of a significant slide in the Chinese currency. Anyway, the reaction early on in the week, last week, was for sharp falls in equities, a rally in bonds as fears of deflation increased, and a fall in the US dollar, really as speculation grew that the Fed would not have to raise rates, although I think it's still likely that they will not be deflected from that path. But post Thursday's press conference, equity markets recovered and bonds did sell off in reaction to the People's Bank of China's comments. Let's have a look at the calendar for this week. A little more in the way of data and events out this week. Probably the most important event this week will be the minutes from the Federal Open Market Committee, the FOMC meeting. This is the rate-setting committee of the Federal Reserve, the US's central bank. The minutes are very important for the markets because it gives us insight into exactly what their thinking is. This is the minutes from their meeting a couple of weeks ago. In light of the potential imminent rise in rates in the US in September, it is very important that the market sees what the Fed are thinking. And this meeting happened before the renminbi devaluation last week, of course, but I think they're unlikely to be distracted by that, the Federal Reserve, and they'll be focusing on the hard data that's come out of the United States, obviously, rather than any global events. Anyway, so other than that, we've got inflation data both here in the UK, so that's the CPI, inflation data, consumer price index in the UK, 9:30 on Tuesday. We're looking for a flat number again, similar to the one from the previous week, so neither deflation nor inflation. I think the market is a little bit sensitive at the moment. Comments attributed to one of the members of the MPC, and this, in fact, it's been reported in the BBC, warning of low interest rate risks. Effectively, Kristen Forbes has been saying that rates need to rise well in advance of any rise in inflation. They can take between 1 and 2 years to take full effect. She's basically said as a result, rates would need to rise well before inflation hits the 2% target, she said. So she's really suggesting that rate rises could happen sooner than currently expected by the markets. That has given sterling a little bit of a lift, although the gilt market, in common with the Bund market, is quite steady first thing on Monday morning. Other data out, we've got US inflation out at 1:30 on Wednesday. Again, very benign reading, slightly lower than the previous month. Of course, in common, what's affecting all markets at the moment is the continued slide in crude oil and the products. Crude oil almost close to touching the 2009 low, when other factors, not just supply, were affecting the markets. It was more an issue of demand as well. And demand now is one of the factors that continues to push crude lower, as Chinese demand appears to be waning, in fact affecting a lot of commodities as the commodity super cycle comes to an end. Okay, other than CPI data, we have got retail sales out in the UK on Thursday, an improvement from the negative 0.2% being reversed, plus 0.2%, so a slight pickup there, nothing too shattering there, nothing that would prompt any major reaction in the markets, I would have thought. Manufacturing data in the US, we've got the Philly Fed Manufacturing Index. That comes out at 3 o'clock. That's probably one of the more important manufacturing pieces of data. 7.2, so an improvement from the previous month. And then we finish off the week with some manufacturing PMI data out in the Eurozone. And also, if you are involved in trading the Canadian dollar, we have the Canadian inflation data, core CPI data out on Friday at 1:30. So probably the highlight of the week is the FOMC data at 7 o'clock on Wednesday evening, followed by the CPI data out in the UK and in the US, with the manufacturing data from the US on Thursday as well. That's it in this quietish period of the year in terms of summer doldrums, although it wasn't particularly quiet last week with the Chinese devaluation. Surprises tend to have a more significant effect than normal, as the liquidity is not really there to prevent some significant moves. So it's worth keeping well abreast of developments. That's it. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.